On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Let's talk about Kiwibank today. It's been in the news again, with the government announcing that it will consider tapping KiwiSaver funds and other large investors for another $500 million to inject into the business. Now, our state-owned bank has long been touted as a candidate for an IPO, which stands for Initial Public Offering. That essentially means a share market listing, which would make it available to anyone who wants to invest. The government's saying that still could happen, but apparently Kiwibank will need to complete its digital transformation first, which isn't expected until 2028. Hopefully this move they're talking about more immediately is a stepping stone on the path to that full-blown IPO or listing, because I think Kiwibank would make for a really good candidate. It's important that we retain control of it, obviously, and we want to keep the bulk of its profits within New Zealand. Many of us want a bank we can support as customers, rather than one with a head office across the Tasman in Sydney or Melbourne. But what I don't like is the idea of politicians running businesses, at least not completely on their own. They're just not very good at it, and we see evidence of this time and time again, both at the central government level and within local councils and governments. The port sector is one obvious example. There are numerous ports right up and down the country that are owned and run by local councils. They're often subsidised by ratepayers on the back of underwhelming operating performances. In contrast, look at the share market. You've got Port of Tauranga, you've got Napier Port. Both of those are still majority owned by local councils, but they're also partially listed on the market, which means you've got a whole range of other shareholders that own shares in the company too. And those two businesses have thrived in the listed arena. They've become much more successful companies, and they've got far superior governance to their peers. We've come to know that as the mixed ownership model. That was a phrase which was used ahead of the partial sale of the three state-owned electricity companies a little over a decade ago. Now, during 2013 and 2014, the government of the day sold just under half of Mighty River Power, which is now known as Mercury, New Zealand, Meridian Energy, and Genesis Energy, and they listed the three of those on the stock exchange, on the NZX. Now, I know a little bit about the electricity industry because that's actually where I started my career almost 25 years ago, and I worked for one of the businesses that was already listed on the share market at the time, and we used to make fun of those three bloated government-owned entities. They were big, they were slow, they were inefficient compared with their publicly listed peers, but at the same time they were really difficult to compete with, not because they were particularly well managed, but because they didn't operate commercially, nor did they seem that fussed about getting a fair return of their assets. And like many organisations which are governed and run by politicians, they just didn't have enough respect for the capital that taxpayers had invested. And I recall a year or two after the listing of those three businesses, I remember asking one of the chief executives about the biggest change that he had noticed since the share market float. And right off the bat, he said scrutiny. Just one word. That was his answer. What he meant was the increased pressure to manage the business efficiently, spend each dollar wisely, and have a very clear strategy about where you're going. There's nowhere to hide when you've got an army of competent, experienced analysts and investors watching you and judging your every move. So when you look at those three electricity companies, they're far, far better businesses today than they were back in 2013 or 2014, and that's reflected in the steady earnings and share price growth that we've seen over that period. And contrary to popular belief, that success hasn't come at the expense of consumers. According to government figures, electricity costs per unit have increased at a slower rate over the last decade than they did when the SOEs dominated the landscape, when these businesses were completely government owned. The government still obviously owns a majority stake. They own 51% of each of those companies. So they've continued to benefit as a major shareholder, and they've also retained control. And for me, I think it's much better to own half of a great business than all of a lesser one. The bulk of the other half of the profits have largely stayed in the country too, with most of the rest of those shares being owned by KiwiSaver funds and other New Zealand private investors, as well as the government obviously with its majority stake. This approach has allowed the government to release funds to spend on other priorities, it's fostered stronger businesses, and it's broadened our share market and the range of investment options. A share market listing also makes things much easier when new capital is required, and having enough capital as well as access to more of it is crucial for a bank to be successful, especially if you want to go head to head with those big Aussie competitors with very deep pockets. The mixed ownership model has provided the best of both worlds for all involved, and I hope that the politicians are keeping this in mind as they think about that next phase of growth for Kiwibank.
For more insights, visit craigsip.com.